Assalamualaikum warahmatullahi wabarakatuh. Hi everyone, back again with Group 1. In this occasions, we're gonna explain about tax invoice. The members of the groups are Wilayah Rizko, Salsabil Asri, and Aisyah Wahyuni. This material will be detailed explained in 3 parts. First part is understanding of tax invoice, second input tax invoice credit for integrated submissions, and lastly e-invoice tax. The first part is the understandings of tax invoice. According to Article 1 number 23 of Law number 42 of 2009, tax invoice is a proof of tax retributions of taxable entrepreneur or PKP who submits the taxable goods or BKP or submissions of taxable services or JKP. When PKP sells the taxable goods or services, it must be issued a tax invoice as a proof that they have collected taxes from people who have purchased taxable goods or services. Just to keep in mind that taxable goods or services traded have been subject to tax costs in addition to the cost of goods. Tax invoices must be made by PKP for each submissions of BKP and or JKP, intangible BKP exports, and JKP exports. When creating a tax invoice, the taxable entrepreneurs or PKP must create a tax invoice on first at the submissions of BKP and or JKP, second when receipt of payment in the event of receipt of payment occurs prior to the submissions of BKP and or JKP, third when receiving terms payments in the event of partial delivery of the work stage, fourth when the BKP exports are tangible, BKP exports are intangibles, and or JKP exports, or fifth, other times regulated in accordance with the provisions of the laws and regulations in the field of VAT. When handing over the BKP tangible, delivery of tangible taxable goods in the form of moving goods occurs when first such tangible BKP is submitted directly to the buyer or third party for and on behalf of the buyer. Second, the tangible BKP is handed over directly to the recipient of the goods for free giving self-use and handover from the center to the branch. Third is the tangible BKP is handed over to the delivery persons or transportations service entrepreneurs, or fourth, the price on the delivery of tangible BKP is recognized as receivables or income, or at the time issuance of the sales invoice by the taxable entrepreneurs or PKP. So the next is when handing over BKP intangible. First, the price on the delivery of intangible BKP is recognized as receivables or income, or at the same time of issuance of the sales invoice by the taxable entrepreneurs, in accordance with applicable accounting principles general and consistently applied. Or second, a contract or agreement is signed, or when the facility or is the use begins in real, in part, or in the whole, in the event that in recognitions at number 1 is not available. When at JKP submissions, the price on the delivery of taxable services is recognized as receivables or income, or at the time of issuance of the sales invoice by the taxable entrepreneur in accordance with the applicable accounting principles general and consistently applied. Second is the contract or agreement is signed, in which case the recognitions of number 1 is unknown. Third is the availability of facilities or facilities to be used for real, either partially or completely in terms of free provisions or self-use of taxable services. The next subtopics that we're going to discuss is tax invoices functions. Tax invoices are very useful for PKP. With the tax invoice, PKP has evidence that PKP has made deposits, collections to reporting VAT tax returns in accordance with the applicable regulations. Tax invoices can be corrected, so if PKP makes a mistake in the filling process, then PKP can make the corrections. If no corrections is done at all, then this will harm the PKP, namely when the auditor checks the PKP tax. The next is tax invoice types. The first is output tax invoice, created by a taxable entrepreneurs when making sales of taxable goods. Taxable services and or taxable goods belongs to the luxury goods. Second is input tax invoice obtained by a PKP when making a purchase of taxable goods or taxable services from other PKP. The third is replacement tax invoice. It has been issued previously because there's a charging error, except for the NPWP filing error. Thus, corrections must be done to fit the actual circumstances. The fourth is joint tax invoice made by PKP, which includes all submissions made to buyers of the same taxable goods or taxable services during one calendar month. The fifth is the Gunggung tax invoice, not filled with the identity of the buyer, name, and signatures of the sellers that can only be made by the retail merchant PKP. Last but not least is a disability tax invoice, not filled out completely or unsigned, including errors and failings in the code and serial numbers.
The next part is input tax invoice credit for integrated submission. Definition: Input tax invoice is a tax invoice obtained by PKP when making purchases of taxable goods or taxable services from other PKP. Tax data integration is host-to-host connectivity between the taxpayer ERP platform and the tax reporting and the payment provider server. In other words, the company taxation system has been integrated directly with the system of the Directorate General of Taxes. The integration of taxation data is important because it is very profitable. One of them is the supporting good corporate governance in terms of transparency in the company financial management. On the other hand, integration is also expected to boost tax revenues. Buyers of taxable goods, recipient of taxable services, importers of taxable goods, parties who utilize intangible taxable goods from outside the custom area, or parties who utilize taxable services from outside the custom area are obligated to pay value-added tax and are entitled to receive proof of tax levies. Value-added tax that should have been paid is input tax for buyers of taxable goods, recipient of taxable services, importers of taxable goods, parties who utilize intangible taxable goods from outside the customer area, or parties who utilize taxable services from outside the customer area who have the status of taxable entrepreneurs. Input tax that must be paid by taxable entrepreneurs can be credited with the output tax levied in the same tax period. However, if for some reason there is an input tax that should be creditable, but by the taxable entrepreneur concerned that has not been credited, the input tax can still be credited in the next tax period. The credit period is at most 3 months after the expiration of the relevant tax period, with the condition the input tax has not been charged as a fee and has not been checked by the Directorate General of Taxes. Next is input tax crediting cannot be applied to some expense. First, acquisition of taxable goods or taxable services before the entrepreneur is confirmed as a taxable entrepreneur. Second, acquisition of taxable goods or taxable services that have no direct relationship with business activities. Third, acquisition and maintenance of motor vehicle in the form of sedans and station wagons unless they are merchandise or lease. For utilization of intangible taxable goods or utilization of taxable services from outside the customer area before the entrepreneur is confirmed as a taxable entrepreneur. Fifth, the acquisition of taxable goods or taxable services whose tax invoice do not meet the provisions or do not include the name, address, and taxpayer identification number of taxable goods, buyers, or recipient of taxable services. 6. Utilization of intangible taxable goods or utilization of taxable services from outside the customer area whose tax invoice does not meet the provisions. 7. Acquisition of taxable goods or taxable services whose input tax is billed with the issuance of tax provisions. 8. The acquisition of taxable goods or taxable services whose input tax is not reported in the value-added tax period notification letter, which is found at the time of inspections. And last, acquisition of taxable goods other than capital goods or taxable services before taxable entrepreneurs produce. If in a tax period the output tax is greater than the input tax, the difference is the value-added tax that must be deposited by the taxable entrepreneur. Conversely, if in a tax period the creditable input tax is greater than the output tax, the difference is the excess tax composite to the tax period. For the tax period of the end of the financial year, taxable entrepreneur can apply for a refund of tax excess. If in a taxable period, the taxable entrepreneur, in addition to making a submission owed by tax, also makes a submission that is not owed by tax, then the amount of input tax that can be credited is only input tax related to the submission owed by tax only. With a note, the portion of the handover owed by tax can be known with certainty from the bookkeeping. When the amount of surrender owed by tax cannot be known with certainty, the amount of creditable input tax is calculated using the guidelines stipulated by the regulation of the Minister of Finance. Next is credit guidelines regulated by the Minister of Finance. PM crediting guidelines for PKP whose business circulation does not exceed a certain amount. PMK 74, PMK 3, 2010. PKP that can use the guidelines for calculating input tax credit is PKP which has a business circulation in one financial year not exceeding 1,800,000,000 rupiah. The above PKP can use the above mechanism if eligible, have a business circulation in the previous 2 financial years not exceeding 1,800,000,000 rupiah for one financial year, or newly confirmed taxpayer as a taxable entrepreneur. For PKP private person who are excluded from the obligation to hold bookkeeping, the definition of the above financial year is the calendar year. Taxable entrepreneur who use the guidelines for calculating input tax credit must switch to using the mechanism of crediting input tax with output tax starting from the next tax period after the business circulation exceeds 1,800,000,000 rupiah. The amount of creditable input tax calculated using input tax calculation guidelines amount to 60% of the output tax for the delivery of taxable services, 70% of the output tax for the delivery of taxable goods. So, for PKP who submit taxable services and use this method, it is only mandatory to deposit VAT at each tax period of 4% of the taxation basis, in this case gross circulation. As for PKP who submit taxable goods and use this method, they are only obligated to deposit VAT at each tax period of 3% of taxation basis, in this case gross circulation. Next is PM crediting guidelines for BKP who conduct certain business activities. Taxable entrepreneur who carry out certain business activities in calculating the amount of input tax that can be credited must use the guidelines for calculating input tax credit. Certain business activities are business activities that solely perform delivery of used motor vehicle at retail, handover of goods generally at retail. As of March 1, 2014, point B is obliged. The amount of creditable input tax calculated using the input tax credit calculation guidelines is 90% of the output tax in the event that the taxable entrepreneur submit used motor vehicle at retail. So that for BKP traders of used motor vehicle at retail, every tax period must deposit VAT of 1% from the basic taxation. Next is PM credit guidelines for BKP who submit outstanding and obtain or exempt VAT. The guideline, by using the norm as contained in Article 9, Paragraph 7 of the VAT law. Creditable input tax consists of two. First, produce a BKP whose submission is included in the non-taxable submission, and processing and are further utilizing the above BKP either through its own processing unit or through take care by using other BKP processing facilities, so that it become a BKP whose submission is included in the submission owned by taxes. Input tax credit calculation guidelines. BKP credit inputs tax by using the guidelines. P equals to PM times Z. P is the amount of input tax that can be credited. PM is the amount of input tax on the acquisition of BKP and or GKP. Z is a percentage comparable to the amount of surrender owned tax against the entire surrender. BKP credits input tax on the acquisition of BKP and or GKP in the month of acquisition of BKP and or GKP in SPT period VAT period of BKP and or GKP acquisition month. For BKP and GKP whose useful life is more than 1 year, P absent equals to PM divided by T times Z absent. P absent is the amount of input tax that can be credited in one financial year. PM is the amount of input tax on the acquisition of taxable goods and or taxable services. T is the useful life of BKP and or GKP specified as follows. For BKP in the form of land and buildings is 10 years. For BKP other than land and building and GKP is 4 years. Z absent is a percentage proportional to the amount of submission on tax on all submission in one financial year. For BKP and GKP whose useful life is 1 year or less, P absent equals to PM times Z absent. P absent is the amount of input tax that can be credited in one financial year. PM is the amount of input tax on the acquisition of taxable goods and or taxable services. Z absent is a percentage proportional to the amount of submission on tax on all submission in one financial year. BKP calculation input tax on the acquisition of BKP and or GKP that has been credited for each financial year according to the useful life of BKP on or GKP. PM has been credited in the month of acquisition of BKP and or GKP divided by the useful life of BKP and or GKP. BKP concludes that the amount of input tax must be reconsidered can reduce or increase input tax for the January tax period, February or March next tax year after the end of the relevant financial year. Reduce input tax if input tax on the acquisition of BKP and RGKP that has been credited for each financial year according to the useful life of BKP and RGKP greater than the amount of input tax resulting from the recount. Increase input tax if input tax on the acquisition of BKP and RGKP that has been credited for each financial year according to the useful life of BKP and RGKP is smaller than the amount of input tax resulting from the recount. Examples of input tax crediting treatment. Input tax on the acquisition of machinery used to produce corn oil. Masukari tax for the acquisition of the office equipment that is only used for the delivery of office rental services. Input tax for the purchase of trucks used for public transportation services because public transport services are not GKP whose submission is not owned VAT. Input tax for the acquisition of trucks used both for corn plantation and for corn oil plants, some of which are sold to other parties and not processed by the owner of the corn plantation into corn oil.
Okay, the next material is about e-invoice tax. So what the meaning of e-invoice tax? As we know, as a PKP or taxable entrepreneur, of course you will not be separated from the business of making electronic tax invoice and managing e-invoice, starting from issuing e-invoice, managing input taxes, calculating VAT payable to reporting tax return for the period of value-added tax. So next is definition e-invoice. E-invoice is a tax invoice in electronic form. If you want a more detailed explanation, e-invoice is a tax invoice made through an electronic application or system that is determined and provided by the Directorate General of Taxes. E-invoice tax is made by PKP or taxable entrepreneur who carry out buying and selling transaction of goods and service subject to VAT and LGST. So as an entrepreneur, of course, you must understand what the tax invoice is and the function of tax invoice and how to make a correct e-invoice in order to avoid tax problem which in the end can affect the smooth running of business. So, who is the tax invoice actually useful for? In general, tax invoice are reserved for entrepreneur with PKP status. The tax invoice, which is proof of VAT, will be made by the taxable entrepreneur and then will be submitted to the recipients of taxable goods and taxable service. And why conventional invoice turn into tax e-invoice? Before the official tax e-invoice is used, the tax invoice is created manually and the filing format is made by the Directorate General of Taxes. However, quoted from the official website of Directorate General of Taxes, the system changes from conventional tax invoice to electronic invoice because there are many cases of misuse of tax invoice, such as: first, there is a taxable entrepreneur who issue a tax invoice even though the relevant PKP is not in the capacity to issue a tax invoice. Second, late tax invoice issued. And the third is creation of fictitious tax invoice and double tax invoice. And the last is the large administrative burden for the DGT and the taxable entrepreneur is also a factor why the e-invoice is finally effectively used. Next material is practice e-invoice. Based on the abuse committed by a number of PKP elements, the DGT then began to effectively utilize electronic invoice since 2014. In practice, a number of ASP or Aparatur Sipil Negara help the government in managing electronic tax invoice, one of which is Klik Pajak by Mekari, which continues to be committed to making it easier for taxpayers to report taxes to the government. What benefit can be felt for taxable entrepreneur and for the Director General of Taxes? In taxable entrepreneur sites, the first is entrepreneur convenience, like electronic signature, no need to print out and become one with SPT reporting. The second is protection from abuse by irresponsible parties, like DGT approval and FP validation is known by the buyer. For Directorate General of Taxes side, 1. Easier monitoring, PK PM validation, FP complete data, simplified service, speed up inspection, speed up reporting, and speed up FB serial numbering. Okay, I think that's all about our presentation today. We hope that you guys got the point that we want to share with you. Thank you for attention. Wassalamualaikum warahmatullahi wabarakatuh.